Hello, everybody. This is Bojie. I'm a Bay Area real estate agent, been selling in Bay Area forever. Right now, we are towards the end of 2021. We're in December right now. So, come to think about it, we have already been in this COVID pandemic for 2 years. As you know, crazy time, crazy real estate prices. And today, I want to make a video to share with you about how the Bay Area real estate market has been in the last 2 years during the COVID pandemic in comparison with when life was normal. And I want to share with you my thoughts on how things are going to be going forward, 2022 and beyond. Let's talk about it. All right, let's talk about how the real estate market has been. So what I want to show you is, let's go to a Redfin data center right here. And the Redfin Data Center is a free tool that anybody can use. You don't have to be a licensed real estate agent in order to have access to it. So we're just gonna go take a look at some data. And let's see. Let's first set things up. Let's look at. I'm in the Silicon Valley, San Francisco Bay Area. So let's look at San Jose metro area for the purpose of this exercise. And let's look at the data in the last 5 years. So from 2017 to 2021, this year. And we're looking at new listing data right now. And what you're looking at, and the period per data point is 4 weeks. It's a rolling 4 weeks data. So let me just quickly explain to you what the display looking like. So you've got 5 years, and each year's labeled with different color. And this is basically showing you how each year is performing from the beginning of the year, January, first week of the year, first and until the last week of the year, and what the graph looks like in terms of like the scale. So the way you look at it is 2017 is blue. That's where we started. And then that became the curve. And that's where 2017 ended up with. And then quickly 2018 takes over. So, the history continues from here to here. And then you follow the gray line. And then you follow the dark blue line. And then you follow the brown line, purple line. And then you follow the orange line. This is where we're at. And this is what the first graph on top is telling you. And then the graph at the bottom basically is the same thing, but what it's measuring is the year-over-year changes. So a quick explanation is, let's pick a data point right here, which is March 15th to April 11th, 2021. We have 451 new listing, and so the corresponding data would be right around here on this graph. You'll see it's 451 new homes for sale during the same period of time. And what this graph is showing is how many homes were for sale same time the year before, which is 2020. As you can see on this graph, it shows there's only 200 homes for sale. So one is 451, that's up here, and the other one is 200 down here. So on the graph, on the first graph, that's what you're going to see the location of the two lines. But on this graph, you'll see that the difference between 2020 and 2021 is about 150%. So it's showing you the percentage. It's about 123% in this case. So it's how much the number is different from same time previous year. So that's what this graph is plotting. So as you can see, both graphs are telling in different ways. So the first number that we're looking at is new listing. As you can see, 2021 and 2020 are the two special years because of COVID. So the graphs kind of have a weird shape looking, where all the other years from 17 to 19, these 3 years life were normal. So in terms of new listing, how many new homes came into the market? There's really not a whole lot of differences. Every year kind of follows a similar seasonal pattern where, as you can see, towards the end of the year, we pretty much have very low new homes for sale, and then the inventory starts to pick up right around March, time frame, and then right around April, May, after people have filed their taxes, it kind of peaks out and then it will drop again. So this is the seasonal downturn, except in 2020, right around springtime, people start growing really concerned about COVID. Therefore, people stop selling homes. People stop putting homes on the market. Everybody was in panic. That's why you can see number of new homes on the market for sale dropped to pretty much that like we've never seen before. And same time last year, same time this year, we suddenly start having a lot more homes for sale, because we're looking at the differences between the rock bottom, and it's also the pent-up demand that we had. People put their home on the market and took it off for a short period of time, and then people decided, hey, I still wanted to sell. So 2020, towards the end of 2020, you started to see the inventory starts to come back, as you can see right here. And then we went into a spring seasonal downturn. And then this year, summer, we had pretty much the highest number of homes for sale in the last 5 years, because of some of the people that wanted to sell, should have sold in 2020. Now they're all coming back and join in 2021. And the next thing that we wanted to look at is pending sales. We wanted to know how many of those homes that were on the market for sale are actually in contract. So that's what this graph shows. It kind of follows a similar pattern compared to how many new homes are on the market. What it's doing is it's showing you how many homes are being taken compared to, so this tells you in terms of supply and demand. So as you can see, right around like May, April period, we have 437 homes that were in pending. And if you remember the previous graph, right around this time, we're looking at 451 homes for sale. That means pretty much every home that were for sale were taken. We had equal number of pending compared to, for sale. So it tells like demand was up there and people were buying homes. And down here again, we have already seen this before. The number of pendings were smashed in 2020 spring because of COVID. Therefore, like this year's spring, because of all these pent up demand, the number of pending went skyrocketed compared to the rock bottom of 2020. All the other years kind of follow the same pattern. As you can see, it's pretty seasonal. And then number of homes sold, as you can see, it again follows a similar pattern. It just tells you how many homes actually got sold. As we can see, right around the peak, how many homes came on the market from the previous chart was like around 450. And same time, around 462 homes were sold. That means there are more homes sold than homes that are currently for sale on the market. And this basically tells you in the last 2 years of pandemic, the demand was always there. And there was a brief period of time where people felt uncertain and they kind of held their actions, but then quickly realized life goes on. I still need to sell. I still need to buy. So people quickly jump right back into the real estate market. And as you can see in the reflection of these graphs. And the next thing I want to take a look at is the what we call the monthly supply. So inventory supply or months of supply. This basically tells you, and in these graphs, it's basically labeling as weeks of supply. And this is basically telling you, so let's just pick a data point. So let's take a look at 2019, last week of January. Here it says week of supply is 15 weeks. What that means is this is how many homes that are currently for sale on the market. Assuming that there are no more new homes coming to the market for sale, how many weeks would it take for all of the homes that are currently for sale on the market to be completely sold? And the answer is, in this case, 15 weeks. So that's what this graph is showing. It's basically showing you how long would it take for the current demand to, absorb all of the supplies in today's market. And the lower the number is, the hotter the market is. So as you can see here, in around 2019, we had a peak starting from right around here. That was 2018. We had a previous peak. So as you can see, like home prices were, through the roof, and week of supply in this case was only 4.4 weeks. That means it only takes 4 weeks to purchase every home on the market. That was the previous market peak. And then the Fed increased the interest rate, and then we started to see the price drop, and the week of supply starts to go up, and that was 2018. And then with that, it kind of went into 2019. It really peaked out right here in 2019. And it just means we had a lot more homes for sale, and the supply, we had a lot more homes for sale, and the demand wasn't quite as hot as previously. Therefore, you can see this peak right here. And then it quickly went down, and then it quickly went down because, and part of this peak was also a seasonal reason too. And, because previously when the interest rate went up, the homes that were listed for sale in the autumn, fall time, they are still on the market during the winter time, and they're still not selling. So that's basically the accumulative total supply that's causing the peak right here. But then when the spring comes, market quickly absorbed a lot of these demands, so it went right back down, and then it continues to go down. And then, as we know, 2020 take place, we have COVID, and for brief, I would say maybe a month, from April 20 till May 31st is like a little over a month. People were a little bit uncertain. They weren't sure if they should sell or buy, and buyers were not buying. But it didn't take more than a little over a month until buyers start jumping right into real estate again. And that's when the week of supply went down like a rock. And that trend continues into this year. If you look at the orange line, and like this year, most part of this year, we're looking at like less than 5 weeks of inventory. And right now, as of like the first week of December, we're looking at 3.2 weeks of inventory. That means right now there's really no supply. If you're looking to buy a home, there aren't that many homes for you to choose from. So that's what the reality is. That means the current market here in San Jose metro area, and in all the other Bay Area counties as well, the market is really hot, and it's still a very strong seller's market, and it's more so than the previous 4 years. And let's take a look at the days on market. So days on market would be right here, if I can find it. Median days on market. This basically tells you how many days does it take for homes to sell. And again, the lower the number it is, the hotter the market is. So let's take a look at, again, one is showing you the actual days on market, and the other one is showing you the percent changes from the previous year. So if you look at days on market, like I said, the previous graph already shows you like 2019 was the previous time when the supply was, we had a little bit more supply. And it reflects right here that the median days on market was really, really high. And then another peak was right around COVID. For a brief 1 week or two, there was a little bit longer time for homes to sell, but people quickly start jumping right in to home buying. And what we're currently looking at in this orange line is the days on market is barely 11 days. That means less than 2 weeks, homes are selling. And pretty much every homes are selling. And that's what the market is. So if you are thinking of selling your home, whether you're selling it yourself or not, pay attention to days on market. If your home is sitting on the market more than, let's say, 20 days, then you really should reevaluate your marketing and your pricing and all that. Because in today's market, homes shouldn't take more than 10, 15 days the most to sell if it's priced right and if it's showing well and if the condition lines up with the pricing and the showing. So last thing we want to take a look at is the actual sale price in the last for those 5 years. So if you look at this graph, this is the sale price in the last 5 years and how they are performing. Now, 2017 obviously would be the lowest. Of course, the further back, the cheaper the homes were. And right now, 2021, we are the highest. Okay, there's no doubt. And if you look at the graph down here in 2020, 21, most part of 2021, we're looking at a double-digit appreciation from the previous year. Okay, and another time when we have like double-digit appreciation is 2018 compared to 2017, because 2018, as you can see from here, we had another peak right around that time, and that was when homes, like in 2017, that was the market in 2017 right here and going into 2018, and right around here we peaked out. And after that, it kind of, especially during the second half of the 2018, we had almost like, if you look at the graph right here, right around that time, we started to go down and we started to go down. We started to go down here. And that was when the Feds increased the interest rate right around that time. And that's causing the affordability issue. So a lot of the buyers were looking to buy and they could still afford the price right around March 5th to April 1st with the previously low interest rate. But then once the rate starts to go up to 4% almost, the price starts to go down because the affordability was being smashed. And as you can see right here, and most of the 2019, home prices were looking at a 10% decrease compared to 2018, which is the price right here. And for most part of 2019, we were at a correction stage. As you can see, 2019's price is pretty much right here, which is below 2018. And with that going into 2020, and then the COVID happens. One thing that had a pretty big change during COVID was, of course, people are not selling homes, and the interest rate dropped because the government felt that, because of COVID, the retail businesses are getting smashed, economy could get smashed, everything could get smashed. Guess what? Let's drop the interest rate. Let's encourage more people to do business, to borrow money, to fund their business, to stimulate the economy. So that's exactly what happened in 2020, right before the COVID. So we have moratoriums on foreclosure and rental, like eviction, and we had a drop on the interest rate. We had a list of things and stimulus package and all that. So this suddenly makes a lot of people suddenly have money and they want to put money into assets like real estate or stock or something else to fight against the inflation. So therefore, 2020, when the pandemic took place, interest rate went down, demand went up really high. So as you can see, the price starts to come back and it starts to catch up with 2008's previous peak. And then it most of the time it just kind of ride along. And then finally, right around later half of 2020, the price pretty much have already caught up with 2018's previous peak, which is right here. And with that trend going into 2021 this year, the rates are still very low. Still, there's a moratorium ban, and the stock market was going crazy, and the crypto market was crazy, and also due to a supply logistic issues, a lot of the home building materials were not available. Home building project took a lot longer times to take place, and permit application process were taking forever. So these further makes the supply becoming an issue, and the home prices basically smash through the previous peak, like where we're right now. Like if you look at the graph right here, we are at an all-time high. We have already smashed through the previous peak, and with the price being at a much higher level, the interest rate is still very low. Therefore, in terms of affordability, people can afford a higher price with a lower interest rate. This is currently where things are at right now. So if I have to summarize, in the last 5 years, market has been hot. And due to the pandemic, it kind of caused a temporary dip in home prices and supplies and demands. But quickly, the activities resumed, and it even became crazier than ever. And now we're looking at home prices being at an all-time high, and we still don't have a lot of supplies. And days on market is literally within like 2 weeks. So we're looking at a very, very hot market. And now we're going into the winter. Knowing the seasonality is that winter time, especially December, January, and February, there's usually not going to be a lot of homes for sale. I would say the market will continue to be really, really tight. Competitions will still be very, very fierce. And that would be most likely what we're going to be looking at going into the winter and the beginning of next year. And now, going forward, what is going to happen? Now, it's really hard to say, but there are usually two things when it comes to the real estate home prices. It's the supply and demand, okay? And with the supply and demand, let's talk about demand. What is driving the demand? And right now, obviously, the interest rate is very, very low. That means we can literally borrow money for free. It's free leverage. And that is one of the huge reasons why people are taking out a loan, and they will offer another 100K, 200K, in my market, which is 5 to 10%, just to get a house. In your market, it might be 10 grand, 20 grand, whatever. So, with money being cheap, you can certainly have bigger leverage. That's going to cause the demand to go up. And going in, as you can see, the interest rate has already been kept at this low for almost 2 years. And next year, most likely, the rates won't be as low as this year. At some point, the government is going to be forced to increasing their interest rate to counterbalance the inflations. So I could totally see an interest rate going back up to 3.5%, or slowly creeping back to 4%, which is the pre-pandemic, like 2018's peak. And if that ever happens, the supply is definitely the demand is definitely going to be smashed a little bit. And that is going to cause the home to stay on the market longer to sell. And that's going to cause a snowball effect, just like what we saw in 2018. Homes should have been sold, but they're not sold. Therefore, they're still on the market because we have less demand. And then more people are selling their home the following week. They're going to join into the inventory. And the people that were selling their home a week ago, 2 weeks ago, or 3 weeks ago, their homes are still on the market. So the inventory can quickly add up if the demand drops. I mean, if the supply dropped. No, if the demand dropped, I'm sorry. And therefore, it could cause the market supply to quickly snowball into now suddenly you have a lot more homes waiting to be sold and not enough buyer. And that's exactly what happened, what you're seeing in 2018. Because if you look at the new listing from this graph, when life was normal, the new listing is pretty much the same in terms of numbers. It just follows a seasonal downturn pattern. But, the people that wanted to buy and the people that wanted to sell, that's usually about the same every year, But now, let's say the people that were selling, they're not sold, and therefore they'll continue to sell. And then you got more people looking to sell. They're going to come onto the market, and they are definitely going to make the inventory a lot longer. So if the Fed increase the interest rate, I could see one thing is the demand is going to pull back, and that is going to cause the inventory to really expand, and that could cause the home prices to temporarily pull back from its previous peak. That could happen in the second part of next year or longer. Nobody knows when, but interest rate is definitely one huge pressure on the price appreciation. And as far as the supply goes, the new construction homes are still going to be at pretty much similar rate like today's market. We're still going to have difficulty with the material supplies, and the process of building new homes are not going to get faster. And so that part of the inventory, it's not really going to help much. And I would say the main factor will be, number one, the interest rate going up. And number two, of course, if you look at the home prices, it's been going up for the majority of this year. We're looking at a double-digit appreciation from the previous year. And homes normally, when life is normal, homes normally appreciates, less than 10%, like if you look at most of the previous years. And but due to the pandemics, this year we're looking at a literally like 14, 15, 20% appreciation year over year. And I personally don't see this level of appreciation is going to continue forever. Pretty soon, people are going to feel that they're being priced out of the market. And this could further reduce the demand in the Bay Area's real estate market. So if people feeling like they're getting priced out and the interest rate goes up, these two can be two perfect ingredients that would cause the home prices in the Bay Area to start to pull back. So therefore, my take is at the first half of next year, I would definitely I would believe, of course, I don't know, but I would feel like that the home price growing is going to start to level up. We're not likely to see a correction or a pullback in the first half of the year, but homes are probably not going to be selling 20%, 30% over the asking price, but they might still be growing at, a 5 to 6% or maybe 10% at the first half of the year. And then it really depends on what the interest rate is. Like I said, it could happen anytime. Once the interest rate goes up, the home prices, it will definitely put a lot of downward pressure on the home prices. And also, looking into the factors of property tax, also going to be a lot higher, with home prices being so high, plus the interest rate. This could further decrease the demand. And so in summary, what I think is like, if you are looking to buy and if you're looking to sell, now is always a good time. Okay. If you're looking to buy because you have to, now is a good time. Don't wait until the interest rate goes up. And at that time, even the price goes down, your monthly payment is still probably the same or more. It's literally a wash. And if you're looking to sell, now is a great time. And the market may not be as hot as like today forever. And I don't believe it's going to last forever either. So if you have any questions about buying or selling or questions about the market in general, feel free to reach out to me. My contact is below. And well, thank you for watching. And I'll talk to you guys next time. Have a wonderful holiday.